20 years ago, a company set out to do something almost no one believed was possible: build rockets that fly to space, land themselves, and fly again. Today, that same company is about to make history a second time. This week, SpaceX is going public in what could be the largest stock market debut the world has ever seen. So, how did we get here? This is the SpaceX story. Let's start at the lowest point. In 2008, SpaceX had attempted 3 launches of its small Falcon 1 rocket, and all 3 had ended in failure. The company was almost out of money. Elon Musk has said he had just enough left for one final attempt. If the 4th launch failed too, that would be the end. So before we talk about a $1.7 trillion company, remember, it very nearly never made it off the launch pad. SpaceX, short for Space Exploration Technologies, was founded in 2002 by Elon Musk, using money from the sale of his stake in PayPal. His goal sounded almost absurd at the time: make space travel so much cheaper that humanity could one day become a multi-planet species. Here's the key insight. Back then, rockets were used once and then thrown away. Imagine flying a brand new plane across the ocean and then scrapping the entire plane on arrival. That's how the rocket industry worked. Musk's big bet was that if you could land a rocket and fly it again, you could cut the cost of reaching space by an enormous margin. Then came the turning point. In 2008, that crucial 4th launch of Falcon 1 finally reached orbit, the first privately built liquid fuel rocket to do so. SpaceX had survived, and shortly after, NASA awarded it a major contract that kept the lights on. In 2012, SpaceX's Dragon capsule became the first commercial spacecraft to dock with the International Space Station, something only national governments had done before. And then, in 2015, the moment that changed the industry. A Falcon 9 booster flew to the edge of space and landed itself upright back on Earth. The reusable rocket was no longer a dream. It was real. Fast forward to today, and SpaceX is the most active launch company on Earth. It now sends up rockets more often than most entire countries do. Its Falcon 9 boosters routinely launch, land, and launch again. It's developing Starship, an enormous, fully reusable rocket designed eventually for the Moon and Mars. But here's something many people don't realize. The rockets get the headlines, but one quieter business has become SpaceX's biggest moneymaker. It's called Starlink. Starlink is a network of thousands of small satellites that beam high-speed internet down to Earth. The clever part is that it works almost anywhere, including remote places with no cables and no cell towers, from ships at sea to villages far from any city. SpaceX has launched more than 10,000 of these satellites, by far the largest fleet of satellites ever put into orbit. And because so many people now pay monthly for Starlink Internet, it has grown into SpaceX's biggest source of revenue, estimated at well over half of the company's income. So when investors look at SpaceX today, they're not just buying rockets, they're buying a global internet company too. Which brings us to this week. For more than 20 years, SpaceX has been a private company. It was owned by Elon Musk, its employees, and a small circle of investors. If you wanted to own a piece of it, you basically couldn't. This week, that changes. SpaceX is doing an IPO, an initial public offering. If you've been following our series, you know exactly what that means. An IPO is the moment a private company opens its doors to the public and lets everyday investors buy shares for the very first time. And this particular IPO is shaping up to be the biggest the world has ever seen. So let's look at the numbers, because they are genuinely historic. SpaceX has priced its shares at $135 each. It will trade on the NASDAQ under the ticker SPCX. The company is selling about 555.6 million shares, which raises roughly $75 billion. And that prices the entire company at about $1.77 trillion. To say that plainly, this is on track to be the largest IPO in stock market history, bigger than Saudi Aramco, which held the previous record. At that value, SpaceX would be worth more than Tesla, and would rank among the most valuable companies in the entire United States. The targeted first day of trading is June 12th. But here's a detail that's easy to miss, and it really matters. Even though $75 billion sounds gigantic, it's only a very small slice of SpaceX. The shares being sold are less than 5% of the whole company. The portion that will actually trade freely on day one, what's called the public float, is only around 4%. The other, roughly 96%, stays in the hands of Elon Musk, the employees, and early investors, and most of it is locked up and can't be sold immediately. There's one more interesting twist. Normally, in a giant IPO, big institutions get almost all the shares. But reports say SpaceX has set aside up to 30% of the offered shares for everyday retail investors, several times more than usual. Why does a small float matter? When very few shares are available but lots of people want them, the price can swing sharply in both directions. So why does SpaceX need to raise this much money at all? In its filing, the company says the cash will fund its next phase of growth, and the ambitions are huge. That includes scaling up Starship for missions to the Moon and Mars, expanding the Starlink satellite network even further, and building out new artificial intelligence computing infrastructure. It's worth being balanced here. Those enormous ambitions also come with enormous costs. SpaceX is spending heavily, and it has reported large losses as it invests for the future. A sky-high valuation reflects big expectations, and big expectations carry real risk if things don't go to plan. That's not a prediction in either direction. It's just part of the picture any investor should understand. So let's bring the whole story together. SpaceX began in 2002 with an almost impossible goal, and it nearly went bankrupt in 2008 after 3 failed launches. Its breakthrough was the reusable rocket, the ability to land a booster and fly it again, which transformed the economics of going to space. Along the way, its Starlink satellite internet network quietly grew into its biggest source of revenue. And now, this week, SpaceX is going public at around $135 a share, a valuation near $1.77 trillion, raising about $75 billion. It would be the largest IPO in history, and yet, remarkably, less than 5% of the company is actually being sold. One last thing, and it's important. This video is educational only. Nothing here is advice to buy or sell anything. Whether an investment is right for you is a decision only you, and ideally a qualified professional, can make. Now, I'd love to hear from you. What do you think about SpaceX, both the company and its mission to make humanity multiplanetary? And what's your take on this record-breaking IPO? Exciting, overhyped, or somewhere in between? There are no wrong answers. I'm genuinely curious what you think. Drop a comment below and let's discuss. And just to be completely clear, one final time. Everything in this video is for learning and discussion only. It is not advice to buy or sell anything. Thanks for watching, and I'll see you in the next story.